What's going on, guys? Philip at Trade Genius. All right, we are going to talk about a way to look at price structure that can explain a lot of times why Bitcoin might pull back to a certain level and behave the way that it does. So what we're going to talk about is what I've highlighted here. I'm going to explain to you what they mean and how to identify these areas of price inefficiencies, as we'll call it for now. And we'll explain that more in this video. So let's dive into it.
Trade Genius.
All right, guys, so here's a chart. This chart it's a 4-hour chart, although this technique can be done on most any time frame. But for the most part, this is used on 30 minutes and higher, mainly 30 minutes. This is more of a market profile technique. If you're not familiar with that, you can look up market profile, but it's just a way of looking at the market, especially the stock indices during the regular trading hours during the day, breaking it down into 30-minute periods and watching how price interacts based on what happens in those 30-minute periods. But we're going to talk about when pricing or the auction process gets inefficient, and you'll see that when market starts to trend. And so we're going to talk about how to identify these inefficiencies, and then a lot of times what you'll see is price will come back to these areas of inefficiency, backfilling them, if you will. And so it kind of can give you clarity and also explain why price might pull back to a certain level and then bounce from there. Okay. So this is our Bitcoin 4-hour chart. This is the heat map, and this colors the background depending on what's going on with the futures. And so if you sign up with us, guys, we'll throw that in. If you sign up and get special number one, bundle number one, we'll throw in this indicator, members only type indicator. But it does a good job if it's colored blue as it is here. That tells you it's safe to be long. And then if it starts to falter or change colors, that's a heads up that we might be changing trend. Going to this pinkish shade would indicate look for shorts. All right, so zooming in here, look at this. This area I've shaded. Okay, so these are going to be these areas of inefficiencies. I'm going to shade with these rectangular colored areas. So what we're looking for is, you'll notice that price breaks out over the previous high, comes up, and then comes back. So when price breaks out, that's when we look for what I would call singles. So they're single prints, meaning that there's only one bar that's printing in this area. There's no subsequent bars printing in a particular area. So the subsequent bar here, you'll see pulls back to this level here, about 98.16, and then that's it. So it never did come back and get back to this level of breakout. So this area here from approximately 97.53-ish to 98.14 or 98.15, that's an area of what we call a single print. So it's an area of inefficiency. And we will extend that rectangle out, and as we scroll through this chart, we'll see what happens with price. But that's what we're looking for when price breaks out, starts to trend, and we have an area that doesn't get backfilled and it's left, and that one single bar is the only area. There's no other subsequent price action that takes care of this move up, right? So this area is left untested, if you will. Okay, so we mark that. Here's another one where same thing breaks out over this previous high. Now we look for, in this case, I would mark those there at that point, and then you'll notice market comes back and starts to backfill. Now it stopped there. So what I would do is, if after that bar had formed, I would change this to there. Because the top of this candle is there, right, and that part, so that portion of that bar is a single print. See how that works? So now you have two areas of single prints. So if we were to just go back, we won't worry about any others just for the sake of just going through this. But if you look and see how price reacts, you see how this dip comes back down to that. Okay, so you would actually be, if the market runs up like that and you're looking for a pullback, because in this case trending up, you would look for a pullback to buy. This would be an area you would look to bid and fill in that inefficiency. So those are good areas to look for buying a pullback to. So if you can wrap your head around this technique, maybe watch this video a couple of times just to get your head wrapped around. It's when you have one bar that has an area that only that bar has printed through after it moves up or down, but you're looking for a break up or a break down, and then you're looking for an area where there's no subsequent price action after the bar prints that was back tested. So now this one here gets down to there, so you could actually move that to there. Now that's another set of singles that's left, right? You also have it on the top here too. If you look at this this bar breaks down, so you have a single to there. We can extend this out to, let's just extend it out like that far. And then you see like price comes back in and fills that back in. So at this point here with this candle, those singles are filled in. All right, and then that's it. But you'll notice though that how price reacted even on this pullback down respected that old single print. So you can delete that once those fill back in, because at that point mission accomplished for price. But as we scroll forward and you see price getting down here, if you're short, you're going to be looking for possibly getting that hit. So where does price come down to there on that? Boom, tags that. So if price is coming down, like already, you know how Bitcoin works, price is going to probably take out these lows that are hanging out over here. You know, they like to grab those stops underneath, and they're going to do that. They might as well take care of that single. Now, this is an interesting single print down here, 9,800, because if you notice, they defended it. And that's our last bottom. We haven't looked back since this low here. And that's where the CME gap is down in here too. So very interesting that they did not fill that in. So if you could fast forward to today where we were at, a lot higher. I marked off some already, and you'll notice that these are probably going to be areas that do eventually get backfilled and tested. And so that's where you would catch a bounce. You know, at this point with Bitcoin going up, we marked off this where we were expecting this moving average to move up and come down to test it. So that was from our previous look at this chart. So we do expect this to come back into this level, probably get a decent bounce in here and come up. But I think ultimately Bitcoin will probably end up ranging in this area a little bit. I think there's a good chance the markets could be range bound until the election, that we get some kind of flush out, probably election night or something like that. It could get very volatile. There will be a lot of volatility now that we're getting closer and closer to the election. It's going to be very volatile, I think. So we probably have some decent moves that are fairly fast. So I would be more of a in and out approach to this market going forward. Anyway, I just wanted to point these areas of inefficiencies out. Again, this is more of a market profile concept and a term that they call singles. Again, it's when you have a single bar and the price in that single bar does not get backfilled in subsequent bars. Okay, that's what that means. So check it out on your charts. Again, you might want to watch this video a couple times to wrap your head around it. It's not overly complicated concept. It might take a couple reviews just to understand and how to identify them properly. But they're great spots to catch a dip, and also to keep noted on your chart for potential areas that Bitcoin might be drawn into just to backfill those inefficiencies. Because especially on like the S&P 500, when we have areas of inefficiencies, especially on price action or on the tape, because that market's got a lot more algo-driven price action, they will seek and destroy any areas that are inefficient on the tape. And it's kind of the same principle. There's just an inefficient auction process, and price tends to go back and backfill those levels. All right, guys. Well, I hope that helps. Just another concept out there to help your trading out. And if you like it, let me know in the comments below. If you have any questions, also post them below and we'll get back to you guys. Thanks for watching. Please hit like and subscribe. Really helps out the channel. I'll see you on the next video. Take care. Bye-bye.
Trade Genius.